It's Chris from Mullen, and today I'm going to talk about the oversold condition we have in the QQQ, which is generating a potential buy signal for short-term traders and what could spark the next leg higher. This is obviously going to help push our accounts to new all-time highs, which we keep hitting with our trading signals and our investing accounts. I'm going to touch on some underlying trends that you need to be aware of, and of course, the bottom potentially forming in the bond market. And last but not least, we got the energy space and oil poised and ready for another push higher. And I'll provide those targets there. So if you're not subscribed to my YouTube channel, make sure you click the subscribe button, click the bell so you're notified. I post these updates every now and then to help keep you informed. It's Thursday, June 27th. Yesterday was a pretty big day. Not so much in the markets, but my little baby girl graduated from school, and now she's going to high school next year into grade 9. A pretty big graduation night for her and party. And I was kind of a grown man who almost kind of cried last night. I teared up. But it's pretty amazing watching our kids grow up and how fast time flies. But anyways, let's take a look at the markets. Markets are holding tight. If we look at the SP 500, flagging out here, holding around the 5-day moving average, which is a great sign. If we get any traction here, the market's ready to pop and rally and have another move up based on my technicals and cycles and things like that behind the scenes that we can't really just see from the charts. The markets are like a day away from potentially generating another trigger in terms of another momentum leg to the upside. So we're super close to having a very strong move again in this market. It's primed and ready. We just got to see if the market is going to do that. Obviously, the underlying trend, the long-term trend is up. The short-term trend is up, but holding tight here. But we're about to trigger and probably see another wave of money wanting to move back into this market. And that's going to push, obviously, the SP 500 higher. If we look at the QQQ, we're going to see this have another leg up as well. So overall, markets are primed and ready. If we look at the QQQ, we can actually see it's gone through its waves. It had a pullback. It got oversold, which is lime green. We had a nice big rally up. It's had a pullback. It got oversold. It went lime green. It's starting to move up. And if we zoom in on the 30-minute chart, we are kind of testing right here at this resistance area, which is right through the heart of this oscillation. So we have price chopping around through here. If you were to take the average price, that is the average price through there. And that's why it keeps, every time it gets up there, the average trader who got in here and held through here and panicked is now saying, get me out at break even. And that's sellers keep coming in and unloading shares and holding it down there. But it's looks like it's wanting to poke and pop through there and have another push back to the upside. Short-term momentum shows that if it pops here, we can go right back up to about 485, which brings us right into the middle of this other noise right through the middle of this here. So if we were to just draw that, you can see the average price through here as well is going to be right there. So there's some good potential upside for this market to pop any day. From where it closed yesterday, that is about a percent pop. Nothing huge, but it would definitely, I think, get people piling back into the market and could spark that next rally. Of course, the QQQ won't be hitting new highs, but the SP 500 will most likely be hitting new highs because it is flagging in a very tight pattern. A 1% or 0.75% move should poke it to new highs. And of course, that'll be pushing our trading accounts up as well, which would be nice to see. If we take a look at where money is flowing today, stocks are down a little bit of a breather. Bonds definitely pulled back yesterday. They're down over 1.4% yesterday. In the grand scheme of things, I feel like this is a major bottoming pattern unfolding, but it could still take a year or so to unfold. It doesn't mean it's close to a bottom. To me, it doesn't mean it's a buying opportunity. It just means the way everything is moving and the way the volume is flowing. Again, the fact that we've had this huge movement in volume telling us that everybody is trying to front run and pick the bottom in bonds, to me is a way that's saying that, hey, this is probably going to take a lot longer than you think. If everybody's doing it, it's probably not going to happen. It's going to drag out. We could still see lower lows on TLT. And if we don't, the market has a way of if it doesn't shake you out with lower lows, it will wait you out. So it could be dead money for another year. And that is a long time to just buy and hold something, hoping it's going to go up and trying to pick a bottom, which is dangerous in the first place. So it'll be interesting to see how this goes. Eventually, this will flatline long enough that the trend will eventually, I think, start to turn up here, and it could be an opportunity for us down the road. Bonds did get oversold yesterday. Big gap down in bonds. And they've got the green indicating that we could see it pop back up. But just looking at the bond market, you can really see it keeps having these gaps. It gaps lower, it gapped lower, it opened here higher and then sold down. So it has definitely got something going on here. Yesterday, it broke out of that and had a big gap to the downside, very similar to over here. So maybe the same thing's going to happen. Maybe it's going to continue to fade lower and or sideways from here and stair step its way down. But overall, nothing too exciting there. If we look over at crude's continuing to hold up. It does have a pretty nice looking chart pattern. It rallied, had a tight bull flag pattern, busted through the 50-day and through resistance through here, which is through the more or less the heart, the middle of this range is where it took that pause. Now it's consolidating right here, and it looks like it's primed and ready to push up to potentially 86, 87, which will bring us back up to these highs. Could even push higher than that. And that could be one of the reasons why we've seen energy stocks have a really nice push in the last few days. We've seen a couple big up days and then a pause day. So we could start to see this come to life going forward. There was a dividend paid out on XLE, dropping it 72 cents. So this chart would be actually higher if we didn't take the dividends out of the price. So we are seeing energy stocks really moving up fairly nicely here. The dividends just knocked the price down, so it looks more contained, but it is moving up fairly nicely. And in the grand scheme of things, when we look at dividend or energy stocks, we are flirting like with all-time highs again, right back in here. And typically we do see energy stocks do very well just before we go into a financial crisis. So another blow-off phase, a poke to a new high, and then could get wiped out after that, because there is really not much safety in a bear market. And if reset, which is fine, we move to different assets when when the stock market is collapsing. Anyways, that's it for this morning. Bye-bye.